Now let's talk about time, because this is the one thing everyone is obsessed with. And to be fair, they're not completely wrong. Let's say someone invests $500 every month starting at 25. Over time, that could grow to around $1.5 million by the time they're 65. Now, if someone starts the same amount at 40, that drops to around $380,000. And if they start at 50, it's closer to $160,000. Yeah, those numbers feel harsh, and I'm not going to pretend otherwise. Starting early does give you an advantage, but here's what no one really talks about. How many people in their 20s can actually invest $500 every single month? Most people in their 20s are just trying to survive. They're paying rent, paying off loans, figuring out their career. That perfect investor you always hear about, the one who starts early and invests consistently, most of the time they don't even exist in real life.
The person who actually has money to invest consistently is often someone later in life, when things are a bit more stable.
So no, you didn't miss your chance. You just didn't have the same starting point.
And there's something else people ignore. Returns are not fixed. Everyone throws around numbers like 7%, but reality doesn't move in a straight line. Some years are slow, some years grow fast. There have been periods where the market averaged much higher returns, and others where it barely moved. So your outcome doesn't just depend on when you start, it also depends on when you invest. And then there's something even more important that almost nobody thinks about. Time itself has changed. Years ago, people didn't live as long. But today, if you're in your 50s, you could still have 20, even 30 years ahead of you. That's not too late. That's still a long runway. So maybe the real question isn't, can I become a millionaire? Maybe the better question is, can I build enough to actually make my life easier and more secure? Because that's what really matters. And here's something that might surprise you. There are actually systems designed specifically for people who start later. For example, if you're over 50, you're allowed to invest more money every year than younger investors, which means even if you start later, you can catch up faster than you think. Let me put that into perspective. Someone who starts later, stays consistent, and invests properly over time can still build a strong financial cushion. Not overnight, not magically, but steadily and realistically.